Good morning. Equities, fixed income, currencies, commodities, and of course derivatives. This is Markets Today morning. It's me, George Bodo, co-hosting this show with Bide Mwema. You should look forward to lots of discussions around asset allocation. We are talking asset allocation today. Is there risk aversion in the market? That's the key question. How do you deliver alpha in an environment where fixed income is the order of the day? We have with us Ken Minjire, who's a head of securities at Genghis Capital, who's take us through asset allocation discussion. But before that, we also look at some of the most market-moving news we've watched. FX market, the Kenyan shilling has crossed 103 officially. Yesterday, we saw the Kenyan shilling touch 103 against the USD. The big question here is it transitory? Well, that is transitory, but the big question is how far can it go upwards? And be there. You've been following this news since yesterday. What have you noticed? Are you scared? Still scared? We were talking about yesterday. We were talking about 102.7, and you are not scared yet. It's 103 now. Are you scared?
Not yet.
Not yet.
All of this is coming from end of month demand, from oil importers as well as from the manufacturing sector.
Yeah.
I think if we see this trend continue, maybe 2 weeks from where we are at, then you could be concerned. But I think for now, we're not yet concerned. I think what gives me comfort is the reserves that we have.
Yeah.
And yes, globally, we are seeing weakening around the US dollar.
Yeah.
But then for us, I think the fact that we are more focusing on the technical element and we have sufficient reserves. NCBK has been very aggressive in the market in terms of its trading strategy and always coming into the market to balance that. I don't see too much risk in that element. But that said, fundamentally, there needs to be a correction. What the trigger will be, that is something to be discussed. I don't have the answer
We
for
are
that.
actually following some fundamental news that has come out. Some of the statistics we're following is the remittances still very strong as of May. We have over $2.7 billion cumulatively 12 months, which is still good news. Current account deficit still the lowest in about 3 years. That should give support some kind of to the.
Yes, it should.
Is it day trading that is driving the actions?
Technicals and fun. There's what you know, then there's what is done.
Technicals.
It's purely technical.
I'm not worried actually. It's transitory. I think probably in about. Well, let's talk about this. The last week of the previous fiscal year, which ended last week, 20th June. We had significant outflows of FX outflows. First of all, the government redeemed the Eurobond 2014 issue, which they paid about just close to about $800 million. We also had significant outflows in the month of June from the stock market.
Actually, just a slight correction on that. We had positive inflows.
Yeah,
I think it was slightly lower than the first quarter. We had about $40 million positive net inflows into the market. It was, I think what you're alluring to is the more outflows from the banking sector.
Yes.
But the likes of Safaricom, EABL, and I think a bit of BAT were net receivers.
I think so. Essentially, it will not go far. That's what you're saying. It won't go far.
No.
Yeah.
Yes.
Okay, fine. Let's wait and see what the IMF says also.
All right.
The IMF, they will have a view on this. But we get back to asset allocation after this, but let's have a short break and look at the daily commodities.